In Long Beach, single-family homes in Bixby Knolls are selling for over 102% of their asking price. At the exact same time, the median sales price for the area looks like it crashed 22% in a single month. If you're thinking about selling in the next 6 to 12 months, this is the one that you're deciding on. Today's scarcity of competition versus a future where a drop in interest rates could bring a flood of other sellers to the market. It's a moment defined by a massive economic split that is creating two entirely different realities under one city banner. Get this wrong and you could misread the signals and leave money on the table, or overprice your home and have it sit on the market for months. Picture this: you're scrolling through listings in Los Altos. You see a home hit the market on a Thursday. You think, I'll drive by this weekend, but by Friday night, it's already marked under contract. That digital disappearing act isn't a glitch. It's the ground truth of a market that has split into pieces. It's proof that we're living in a city with three different economies: the auction alleys, the great illusion, and the negotiation zones. This is the story of Long Beach's greatest divergence. And it's all happening on a foundation of manufactured scarcity. Citywide, the numbers suggest a balanced 2.8 months of supply for single-family homes. But that's a dangerous illusion. In certain pockets like El Dorado Park, we're seeing a razor-thin 1.23 months of supply. This isn't just a statistic, it's the result of the lock-in effect, where your neighbors with 3% mortgages are refusing to sell, which removes competition and amplifies the value of your home if you do decide to move. It creates a fiercely competitive seller's market. In the next few minutes, I'm going to show you exactly which lane your property is in: the auction alley, the illusion, or the negotiation zone, and how to play each one now, and then I'll show you how the K-shaped economy is reshaping all three. If you're even thinking about selling in the next 6 to 12 months and want to see how this translates into your net proceeds, I've built a quick Long Beach home value review. Hit the link in the description, tell me a little bit about your property, and I'll run a custom net proceeds breakdown for your address. I'm Mr. Hernandez, your real estate advisor here in Long Beach. My job isn't just to hand you numbers, it's to turn this fractured, confusing market into a clear flight plan for your next move. Because to understand Long Beach, you have to abandon the idea of a single monolithic market. Citywide reports are a dangerous oversimplification. We're going to give you the precision you need to make a smart decision. Here's the roadmap. First, where speed and bidding power actually live so you don't miss price and leave money on the table. Second, where an affordability ceiling is quietly capping prices so you know exactly how far buyers can stretch. Third, the spillover sprint segment, where spillover demand is creating intense competition. And finally, how rates and the economy collide with your plan. Let's start with those auction alleys: El Dorado Park and Los Altos, and the luxury enclave of Naples and Belmont Shore. In the El Dorado Park and Los Altos area, we see a 12-day median time on market, with homes closing at 100% of their asking price. In Naples, even with a $1.8 million median price, homes are selling for over 100% of list. If you're an owner in these neighborhoods, your leverage is immense, but it's not just about price, it's about control. This is a market where you can dictate terms: a longer rent back to give you time to find your next home, a non-contingent offer that removes uncertainty, or an agreement from the buyer to cover a potential appraisal gap. Your strategy is to attract multiple offers, not just to drive up price, but to handpick the strongest, cleanest deal from a position of absolute power. If you're a buyer trying to break into an auction alley, you must understand you are in a professional grade competition. A pre-approval letter is not enough. Your financing needs to be fully underwritten. Your offer needs to be clean, and you need to be prepared to make a decision within hours, not days. The winning buyers in this environment are the ones who make it impossible for the seller to say no. Now let's dig into the great illusion in Bixby Knolls and Cal Heights. The median sales price looks like it fell 22% in a single month. You might be thinking, did my home's value just crash 22%? The short answer is no. That headline is just noise. It's a statistical ghost called a mix shift, meaning a different mix of homes sold this month versus last month. And here's the twist: the true signal of this segment's health is the 102.4% sell to list price ratio and the fact that homes are selling 51% faster than last month. This is a hot, accelerated seller's market period. For an owner here, this is a test. Do you trust the headline or do you trust the data? Pricing your home based on that phantom 22% drop is a direct path to leaving tens of thousands of dollars on the table. The data shows that pricing correctly at the market is what unlocks the bidding wars that lead to a 102% final price. For a buyer, that headline is a trap. Any attempt to write a lowball offer based on that misleading number will be ignored. Savvy buyers and their agents will be looking at the real metrics, the speed, the competition, and writing their offers accordingly. This isn't a place for bargain hunting. It's a place for decisive action based on real-time data. Now let's travel over to what I call the negotiation zone, the neighborhoods of Carlson Park and the Plaza area. This is the most misunderstood segment in the city. Here we find a market that is clearly cooling. The months of supply has surged by 85% and the median sales price saw a very real drop of over 12% year over year. Homes here sell on average for 97.5% of their list price. For owners here, this is where strategy becomes paramount. If your home is overpriced, you risk chasing the market down, a painful process of small, repeated price cuts that signal depreciation to buyers. The winning move is a single decisive price adjustment to get ahead of the trend combined with impeccable presentation. In this segment, buyers can afford to be picky, so your home must be the obvious choice. For buyers, this is your moment to breathe. The data gives you a green light. Negotiation power here isn't just about a lower price, it's about having your inspection contingency accepted, asking for repair credits for legitimate issues, and controlling the closing timeline to fit your needs. This is the one segment where you have the luxury of time and due diligence. Now let's pivot to the condo market. The citywide 5.1 months of supply suggests a deep buyer's market, but again, that's an illusion. The real surprise is what I'm calling the spillover sprint, again in Bixby knows. The median days on market is just 10 days with a sell to list price ratio of over 102%. This isn't a random hotspot, it's a direct consequence of the single family market success. The desire to live in Bixby knows is incredibly high, but the price of entry for a single family home has crossed the $1 million threshold. The pent-up demand from buyers who are determined to be in the neighborhood but are priced out of the houses don't just disappear, it spills over, creating a pressure cooker effect in the condo market, which has become the new entry point into one of the city's most desirable neighborhoods. If you're buying a condo in the Bixby Knolls area, you're in a bidding war environment. Speed and certainty beat clever low offers. If you're an owner in Bixby Knolls, this is a launch-style sale. Staging, media, and price designed to attract multiple offers in the first weekend. So quick recap before we zoom out. The auction alleys in El Dorado Park and Naples, 12 days, over 100% of list where sellers have total control. The negotiation zone in the Plaza and Carlson Park area. Buyers hitting an affordability wall, giving them leverage on price and terms. The spillover sprints in Bixby Knolls condos. Spillover demand creating the most intense competition in the city. Auction alley sellers. Your edge is managing a bidding war. Negotiation zone sellers. Your edge is being the best presented option in a price-capped pool. If you want that scorecard translated into a sell now versus hold plan for your address, use the link in the description to request a What's My Home Worth review, and I'll map out these numbers to your exact property. So that's our tour of the ground floor, the reality of what's happening on the street by street in Long Beach. But to truly understand the why, we have to go beneath the surface, into the market's engine room. This is where the invisible forces are at work, the powerful pistons of the interest rates, the fuel gauge of affordability, and the master control of the K-shaped economy that determines who has the power and who doesn't. First, financing costs are stabilizing. The 30-year fixed rate mortgage is hovering around 6.22%. Second, on October 29th, the Federal Reserve lowered its target rate and signaled it's shifting its focus away from inflation. This is crucial. It tells the market that the Fed would rather risk a little inflation than a major recession, providing a sense of stability for the next 6 to 12-month window ahead. The threat of 7 or 8% mortgage rates is effectively off the table. But the most important number, the one that explains everything, is this. The California Association of Realtors just confirmed that only 12% of Los Angeles County households can afford the median priced home. Only 1 in 8. This number is the engine of the entire K-shaped market. For a homeowner, it means your potential buyer is no longer a broad demographic. It's a specific person. This person is high earning, has significant equity from a previous home, and is incredibly discerning. Your marketing, your staging, and your pricing strategy must be laser focused on this 12%. The other 88% are, for the purpose of your sale, functionally irrelevant. If you're a buyer in that 12%, you are in an exclusive club. But that club has other numbers. You have power over the general market, but you face intense competition from your direct peers for the best of the best properties. And for homeowners, this intense buyer-on-buyer competition is what defines your opportunity right now. It creates a clear and urgent choice. Sell into the current scarcity of seller competition, where you stand out to this motivated buyer pool, or hold and ride the next rate cycle, where you'll be competing with a flood of other sellers. If you had to choose today, would you lean more sell next 12 months or hold through the next rate cycle? Type sell or hold. Your answer totally changes how you should hear what I'm about to show you. Because all of this data is built on one foundational assumption, a normal market. But we are not in a normal market. Think of the economy as a highway that suddenly splits. The K-shaped recovery is the force that turned that highway into a high-speed toll lane for a few and jammed up local road for everyone else. This isn't a temporary change, it's a structural rewriting of our market. If you're inside a 6 to 12 month selling window, it means you're selling into a chapter defined by this new economy reality. Here's the simple 3-beat story of what happened. First, high home prices and high interest rates created a massive barrier to entry. Second, this functionally locked 88% of the population out of the market. They are on the bottom arm of the K with shrinking options. Finally, this leaves a small, discerning group of high equity, high earning buyers on the top arm of the K. They are the only players left. They compete fiercely for the best, most well-prepared homes, the auction alleys, and completely ignore everything else, creating the negotiation zones. This creates the central conflict for every single person invested in Long Beach real estate. That's the tension in this great divergence. Right now, you're living in a market that behaves as if every home is in demand in a city where 88% of potential buyers have been sidelined. If you're inside that 6 to 12 month window, your decision is whether to cash out into this unique moments of low seller competition or intentionally hold through whatever comes next. If you do nothing, that's still a decision. You're choosing to bet that your property will continue to appeal to the very top of the market. So here's the bottom line. Long Beach today is priced as if every seller has leverage in a market where the vast majority of buyers have been removed from the game. So the big question is, how do you play your cards in this market? If you're 6 to 12 months out from a possible sale and don't want to guess on timing, pricing, or which side of the split your home falls on, click the link in the description to request your What's My Home Worth review. And if the number suggests you have a move to make, we can book a one-on-one strategy session and turn that into a full game plan. Let's build your flight plan together.